Welcome to our weekly live profiling Q&A session. And if I know JP's he had another call. If he can join us, he'll do that. And typically trying to do these on Fridays. However, my son, who is a high school student, my oldest son, has homecoming. If you're familiar with that tradition. So he is on homecoming court this weekend. That's the third year in a row. And they have a assembly tomorrow, so I'm going to be the time that we would typically do our Q&A. I'll be at a school assembly, so thought we'd do it. Still try to get in this week and making a little bit a tweak on the formatting from last week, and see if you like this. So let's get started. One just quick reminder of the risk involved with trading. Specifically, we look at a lot of futures products. And as a leveraged instrument, there is a degree of risk that is even more substantial than equity. So knowing your risk is paramount. We talk about risk a lot. Just again, a little bit of background on me. I'm the founder of Trade Profile. Been in the industry as a professional on the institutional side since 2016, but have been a retail trader for close to 10 years, back when I was getting my MBA. So we've started Trade Profile in 2017. JP is the other guy that you may pop in here a little bit, and between the two of us, we've got about 35 years of market experience, and we love markets. The core kind of what we do is what we call our profile trading development pathway, and we kind of think it's a little bit unique, and that most people who are doing trader development, I don't know if you've experienced this, but the typical experience that I have had when I was trying to learn was, hey, go sign up for my trading room and like watch me trade, and good luck trying to figure out your own path on that. And that just really frustrated me. I wanted to be able to be a trader for me. I wanted to pick my own trades. I wanted to have my own plan, and I wanted to walk away from markets when I didn't want to trade. And I wanted to come back and know exactly where I was and not feel like I had lost the plot. And so over the last couple of years, we've developed a pathway of understanding of how we see the auction and how we use profiling tools, such that we can take you through that process, build a trading playbook, and send you on your way. It's over 16 weeks that we do that. In fact, I got an email this morning from somebody in our community who was like, "Hey, I think I need to go off on my own for a little bit and try this." And I was like, "Yes, that's exactly what we want." Like we don't do this because we just are trying to have all of these subscriptions and have all these people follow, because that's just a headache. Like really we're trying to deliver competent traders to the market. So one of the ways we do so, as we do that each week, we look at a different module. We thought it'd be kind of cool to just touch a little bit on the module that we're covering this week when we do these Q&As, so you can kind of know where we're at as well and kind of follow along. And this week we're talking about value placement and what to monitor. The rationale behind this, why that's important, is that price is important, and but it's not as important as time and volume at a set price. So in other words, if I look at a specific price, if I was just looking at price on a chart, I don't know if that is a price that lots of people agree on, or if I'm the only one out there, and that could be dangerous. So we spent our time this week with our community looking at how do we look at price in relationship to value. Value, we define value as accumulated volume at a price, and we'll look at some examples here in just a second. And then the objective of that is that a trader can look at value across multiple time frames and discern the strength of each value area or node, and then adds those references to your trading plan. So you can identify, hey, this is a significant price, or this is an area that I want to watch that is important to the auction. So like, I don't know if you follow us on Twitter or on Facebook, I post decision levels every morning that are areas of interest or areas where I have an expectation of the auction doing certain things or having certain control, whether it's the buy side or the sell side. And that's coming from looking at where is value accumulating across multiple time frames. And when we say multiple time frames, we're talking about is it an intraday? Is it, you know, the fairest price, the most traded price of the intraday? Is it across several sessions, or is it across, you know, many, like weeks? And that can compound on it. And then specifically, one of the ways that you can use this has to do with the idea of the trap game. So how many of you have ever heard someone say, "Oh, this you know, these traders are trapped"? You know, whether the, you know, buyers are trapped or sellers are trapped, or, you know, something like this. Have you heard this phrase before? It's a fairly common and known phrase. If you're around markets for very long, you will undoubtedly come across it. And the problem is trying to define what exactly that means. Like, what exactly does it mean to be trapped, and how would I avoid that? And so let's just look at a quick example here, and then we'll just open the floor for other questions. Okay. So let's hide some of this stuff real quick, and let's talk about yesterday. So yesterday, and I by the way, I'm kind of assuming at least some degree of exposure that you have already to the profile. So, you know, if something doesn't make sense, or you're like, "What is that?" Just to holler, let me know, and I'm happy to describe that. But looking at yesterday's RTH session, we had FOMC release. You know, our trading plan is always the same on FOMC. We don't trade until after the release of the number, if at all. And the Fed increased rates as expected, 0.25%, and the initial move away from that scene was to the upside. So about 76.35 was where, you know, 30 was where that scene happened. And then later in the session, buyers failed to gain acceptance. Okay, so and in this product, window trader, one of the cool things is how it can color code intensity of volume. So you can see these prices up here. See how it's all white? That's showing me that it's the lowest accumulation of volume at a price. So it's coloring my market profile graphic by volume intensity. So not just time intensity, but volume intensity. And so up here, if you were a buyer, you were buying above all of the accumulated volume. So imagine in an auction, you're chasing higher prices because you believe the auction will go higher, and then no one else participates with you. What are you at that point? Are you not trapped? This is what the trap game is. So the trap game is where you get it's poor positioning, you get poor trade location, and it's built on the assumption that the auction will continue in a direction. And so, but when it doesn't, and you're one of the last buyers, you are now trapped, and you have a big decision to make. And then that is, you know, do I hold the trade and, you know, kind of hope that it'll eventually come good, or, you know, do I have to weather the auction going against me? And if you've ever heard the term squeeze, a squeeze is where we're taking the mispositioned trader and pushing the auction against them to get out of the position. You know, so like if somebody's short, we're going to push the market, you know, high until they basically just get to their maximum loss and they have to get out. And you know, then you see these instances where then it seems like the market seems to turn around and go the other direction. Then that's not a coincidence. This is part of the emotional game that takes place. And so, you know, our goal, you know, for our community is, how do we get better trade location? If trade location is the best form of risk management. So let's talk about how that impacted today. All right. So if I expand yesterday's profile, you can see that after the FOMC, those late buyers got trapped, and then they pushed the market all the way back through the range and closed outside the initial balance on the lows. We would call this a neutral extreme lower day. It's a special day type that has a pretty high degree of probability of continuity lower than next session. That didn't happen. That in fact didn't happen. In fact, Globex closed here. So we would have expected to see lower prices, and we didn't get that. So one, that's a clue. That's a clue that something has changed in the market. Two, it's also a clue that there were mispositioned traders. So at the same degree that there were traders who were buying up here, late in the session yesterday, there were traders that were selling down here because they just thought the thing was going to fall out of bed. So in one day, you had both buyers getting trapped and run out, and sellers getting trapped. And then if they held, into this session, they got run out. Or if you had somebody who on the open tried to short, they got pushed. Everybody following me? See what's going on? So one of the ways to avoid the trap game is to know where you are in relationship to value. So the further you get away from that. So if I'm buying up here and value's down here, I need to know and define what's my risk here. How much heat am I willing to take on to stay in this trade? And one of the things that I've got to see to stay in the trade is I've got to see additional periods in the direction that would eventually migrate value in that direction. That would be a way of saying we're accepting those higher prices. Okay, so then let's look at today. So today, because you had all these traders over here that were mispositioned, the market opened and absolutely just blew the door to the upside. We were all talking, like in our community, this is very unexpected behavior. And we had a plan to look for if we got. At first we thought this was a gift. We had a plan to look for a short up into this 30 area if we got there. Well, we got there, but let me show you what happened when we got there and why your tools are very helpful. Okay, so this is a 30-minute histogram. It's showing me a 5-minute period, and the little red in here is the intensity of buying or selling. Okay, so in that 5-minute period, as we came into this level, all I saw was buyers. And in the next 5-minute period, buyers. And then in the next month, even more buyers. We didn't see any sellers until we were above my predetermined pre-session bias level. Okay, and then at that point, it's just a waiting game. It's just a waiting game. So then, when you kind of know what's going on, you're like, all right, well, they're gonna squeeze these mispositioned shorts. And then once they've done that, once that's completed, then the short will happen. And so instead, we were looking for the short back here. Once we saw that they couldn't get higher highs and post-lunch, we're trading close to the initial balance high. Now you're seeing the auction in putting on what's called a short covering rally. And it would not be out of school to see us make, even in this last hour, a push down to 56 and clean up these single prints. And we're actually, we're short. We're short coming into this. And I'll show you exactly where the short was established. So all of this, there's just nothing going on. You can see there's no volume in here. We get into this period right here and see this nice push lower with some decent selling on this, sell side, and good volume to the sell side. So then that said, all right, any rallies. So we got some responsive rallies, and then the next time we came back through this area of volume, that's your entry. And look at how the selling came in. Got to the first target, which actually was back to here. Second target is to clean up these single prints. And you know what? We might actually be stopped out here. Hang on one second. Yep. Yeah, stop. So entry was 74, stop at 70. Maximum favorable excursion was 62. So we hit first target. We're going for second target, and they came back and took us out right there. Okay, that was a great high probability trade. And also worked because, so with this whole thing about value and getting trapped is it's not just day to day, but also multiple session. So if I zoom out here and look at the composite for the last several sessions, you can see that there's a big bulk of value way below us. We've got a little node that we're working here at 68, but it's nothing compared to the amount of volume down here. So this entire auction is trading above value for the week. And so that's also going to make, so if I'm trading above value on the day session, above value on the week, above value of the prior session, I'm in a great position to get trapped. And we took out, and how it feels, how it ends up feeling is, like we traded sideways for 2 hours and in 1 5-minute period put all of those longs underwater. That's painful. So that's the trap game. Know where you are relative to value, and if you're below value and you're short, be protecting that. Know where your risk is. If you're above value and you're long, be protecting that. Know where your risk is, because you're in a greater opportunity to get trapped, and you don't want to be trapped as a trader. All right, that's all I got as far as upfront stuff. So beyond that, let's just open the floor and any questions that you have. I'm happy to address those and see what we can find. We can look at some other markets as well. Typically, every day I look for opportunities in the NASDAQ, crude oil, 30-year Treasury bonds, and soybeans. And I will tell you that I took one trade in crude this morning. I'm in a little bit of trouble with my platform. I'm not really sure why it's splitting the profile like that, but that and this other trade in the NASDAQ is about all I've done today. Does the ES look the same? ES actually looks different. So I actually have this template that shows me all of the indexes, right? So I've got the Russell, the NASDAQ, the Dow, and the ES. And one of the things that's really interesting and was helping me on the short side on the NASDAQ was I was seeing greater weakness in all the other indexes. So while the NASDAQ was making new daily highs, all of the other products were either below the points of control from the prior day. So they actually kind of traded the way I would hope to. Like the Dow, for example, came up, tested prior value, found sellers, and had a nice rotation lower. I mean, truth be told, that was probably the better product to trade than the NQ, but it is what it is. I don't like the liquidity and volume in the Dow, but that's just to my taste. It works for anybody else. Yeah, what's also interesting in these products, so you can see this 5-day POC. This is the current most traded price of the last 5 sessions, and all the other indexes are trading below that, and the NASDAQ's trading above it by quite a bit. So it is definitely the outlier for the products. And I'm looking, here's this, here's a hole here in the profile in the ES. There's another one here in the Dow, and then there's this one down here, which is to that that next target in the NQ. That are we've still got time. We've got an hour left in the session here that we could certainly clean those up before the end. And whether you trade these products or trade completely different products, the behavior is the same. So knowing where you are relative to value is really helpful, and it's the advantage. It's the real advantage of looking at the market the way that we look at it. Is you're seeing things that someone who's just looking at price can't see. And so somebody might see a momentum of an auction going lower and go, oh yeah, that auction's going to keep going lower. And they don't know why it all of a sudden rips back on them. And the reason it rips back on them is because no one continued to accept those prices, and they found themselves short way below value, then that's exposed. Yeah, what else? And also, if you have a microphone, happy, just let me know, and you can ask the question that way. That works too. It's easier than typing. I know sometimes I don't like to type. So yeah, I'll show you another example that we were talking about this morning. It's not an often traded product, but Palladium. So let me expand this out. So if you look at this across multiple time frames, okay, so for the last 5 sessions, the most traded price is 1044. Last 20 sessions, it's 967, and the last 180 days, 9 months, is 976. Okay, everybody see that? And see where price is. So this morning, there was a trigger that came in, and look how the auction moved swiftly, back toward what? Back toward this area, this concentration of volume. Actually, it was the current week's point of control. So, if you came in long Palladium, you're at risk, because as you looked across multiple time frames, there was the opportunity that you were going to get a liquidation move like this across you. And now, when they came back toward value, you found buyers step in, and push the thing back up. But now, again, you're back in a similar situation. So there's an opportunity in this product to look for a potential trigger back short, to 1063, and even lower in coming sessions. It's also a great opportunity to get trapped if you don't know where your risk is. Oh yeah, here we go. Here's the push. They're pushing it. Nice. I still have some on, but they're not. I got stop partial there on that at that 70. So hang on a second. Come to Papa. And come on, just a few more. They're so close. They're going to get that done real quick. See all these sellers coming in? Really nice here. So, this is a fantastic question. So when you buy below value and or sell above value, aren't you asking to get run over in a trending market? You absolutely could be. You absolutely could be, which is why one of the confirmation, and it's a great question, why one of the confirmations is that, hey, I'm not in a trending market. You have to make sure that you're not in a trending market. So let's take NASDAQ for as an example for today. So by definition, a trend day often will have one period where it has a lower low. So like here in this period, we had a lower low. Other than that, we were making higher lows and higher highs on each period. So once we got out here and made additional lower lows on 30-minute periods, that was this indication that the likelihood of a trend was much diminished. So until you see that, and see that also corresponds with the areas that we're looking to get short, it's not until you've confirmed that you're not in a trending market. But great question. Is that helpful? Yeah. And I always look for, so whatever time frame, and everybody lots of traders use different depending on your capital size and the trade setups in your trade book. You're using different time frames. Your whatever you trigger on, I always typically look for a confirmation at a higher time frame than what I trigger. So if I'm triggering on a 5-minute time frame, I want to see a 30-minute time frame stop trending first, and then look for a 5-minute to know that there's more participants that are willing. So if I was below value, for example, I'd want to see a 30-minute high, in subsequent periods before I started looking long on a 5-minute period, because I typically trigger on a 5-minute. Is this just the afternoon pullback happening now? It certainly could be. Notice that we are not below halfway back. So actually, where's the VWAP? Oh, it's okay. So actually, we're trading right. This is the volume weighted average price. We actually dipped below that and came back to that. So that's something to watch. But these two references, 50% retrace of the action, and the VWAP are references to, by definition, whether I would consider it a pullback or a potential reversal. So if we trade back through 52 and close a 30-minute below that or an hour below that, then I would not call that a pullback. I would call that a turn. But good question. We're certainly testing the low end of the value area. So, if buyers are going to defend here in the afternoon, they're going to defend this area. But I wouldn't, we're so close, so let's collapse this here real quick. So, I wouldn't consider being long until they cleaned up these singles. I'd want to see them come down, touch halfway back, and hold that. To be long. And then, then the question is, to what is your target if you're going to be long? Based on what? Great questions. Let's kind of look here at the bonds. Bonds are closed, but they traded. This actually doesn't bode well for the equities. So we have a neutral extreme higher day in the bonds. Bonds came back to test multi-session value, where you would expect there to be both buyers and sellers, and the buyers won. So now have the opportunity. I was looking for 141.8 today as a potential high. Most likely not going to get that. Not going to get that closed. But this does not put a situation where tomorrow I'd be looking for early pullbacks, to kind of the 140.13 area for the push to 141.08. Yeah, so let's look at ES, huh? So let's grab, oop, not that way. So right now, ES is trading below halfway back, which is not good news. But I mean, I don't know that they're really going to push it this late in the day. We do have Powell is speaking after or like right after the close. It's also month end, so we'll see how that all plays. There's a little bit of month end, quarter end game going on. Well, this is a good question. So the question is, today we have a P-shaped profile. So what should we be looking for tomorrow? So I know there's a lot of confusion about P-shaped profiles or B-shaped profiles and when and where I use them. So let me answer it by just drawing on the whiteboard here. This will be a little bit easier to understand. Okay, so sometimes a P is a short covering rally, and sometimes a P is accumulation for an incomplete auction. So, and these occur in two different contexts. So if I have a downtrending auction, so if the multi-session auction is moving down, and I come in on the day and immediately rally higher, and then yet late in the session I fail to continue trending. So at some point I kind of start doing this number, which is creating the P. In this context, it's most likely short covering, which would say this was an opportunity to get re-short with risk above the high to look for the next leg lower. That's a short covering rally. However, if it's an auction that's trending higher and I have a move that moves higher and balances, this is accepting higher prices and has no excess to the upside, then that's setting the stage for, as long as this area holds, that the auction would continue higher to create excess or to eventually run out and exhaust the buyers. If it's conversely, the other one is the liquidation break. So if I have a trending market higher and then I come in and all of a sudden it just goes down, and then it fails to trend lower and starts doing this, then that was an opportunity to get long because there was profit taking here for the next move higher. And if I have an auction that is going down and we go like this and then balanced, and that's basically the auction accumulating additional inventory. It's not exhausted, doesn't have any excess, looking for additional prices lower. So based on that and looking at the ES, which would you say? This is the nuanced problem of assessing this. It's actually, let's look at it on this one. I like this one better. So we have a P-shaped profile today in the ES. Question is, what should we be looking for tomorrow? And I kind of gave you a couple different general rules of thumb around how we look at either a P or a B. So if you're building your plan for tomorrow, what would you expect? I mean, I know what I would do, but you asked the question, so. It's a great question, and this is the type of thought that you have to go through as you're building your narrative. And here's the thing. I know that in markets we look a lot for absolutes, and really the only absolute thing that we have control over is our risk. How much. There's no 100% guaranteed trading setup. Some of the best ones that I've seen they're right 85, 90% of the time. Still 10% you're going to be wrong. So the only thing you have absolute control over is your risk. So what you're doing is you're just building a narrative, and then you're watching how the auction behaves based on that narrative to tell you, oh yeah, I'm out of the flow of the market, or or I'm in flow, and it is actually, I am reading the flow of the auction. So let's see. So he said, so we have to wait for break, balance area, or failure at the extremes of the range. Yesterday's range. Balance area at the extremes. Okay, so let's go back over here and look at this. The ES. So if I understand correctly, correct me wrong. So you're saying, hey, so we're within inside yesterday's range. So here's ES range yesterday. It's an inside day here. Okay, with a P profile, right? That's now trading back towards the open. So we have to wait for break of the balance area or failures at the extremes of the range. So extremes would be here and here. Yeah. So I mean that's a valid plan. I'll add a little bit of additional color to this. So let's add the So I'm gonna add the Globex profile back in here. So this includes the full electronic session. So we have single prints here in the auction. If I just isolate the RTH session, so we have a zone of single prints from here to here. If we were to close below value here, so 29.25 is the multi-session value. How do we know that that's a multi-session value? All right, let's go back and look at a range of price, right? So we've been trading the same prices for 4 sessions. Okay, most traded price, 29.25 in both volume and time. So if this auction is going to go higher, it's got to get past this area. So tomorrow, what I would be looking for is attempts higher into this range that fail. That I want to see them test this area and find sellers, and then, oh look, I just got filled at 57. Oh snap! All right, well, sweet. Yeah, there you go. Clean the singles. Excellent. Excellent. They still got half an hour. They could puke. But anyway, I'd look for a test of this value. I mean, let's just say, I'm not creating a plan for the ES, but if I was, this would be the plan. I look for a test up here, and then I'm noticing that I've got some naked POCs, especially if this was a swing trade. If this multi-session value holds, and I can get some selling order flow to go with it, I'd be looking for moves back towards 28.89. However, if I get up into this area and find buyers, then there's no reason that we don't go to all new highs. Let's see. Just gotta make sure that I'm flat everything now. Here, hang on a second. Okay, so that's there. that's there. Awesome. So great question, Joel. Is that helpful? And again, that's my plan. Okay. And I mean, and now it's my plan based on, understanding how the auction ebbs and flows. And I would say, we in module 12, which is coming up later in I think at the end of October, we talk about what we call postures of the auction. And that's where, I mean, you could just look at, this is just something to think about, something to put in front of you, think about. Have a setup like this where you're looking at a product across multiple time frames like this, and just watch, even if you just keyed in on a 1 week time frame, because it's 5 days, and a 1 month time frame, and price. So you've got 3 variables, and watch how the auction behaves with respect to those 3 variables, which would be, price, 5-day point of control, 20-day point of control. You'll find that there are about 9 relationships that occur between those, and the auctions does consistent things over and over and over and over and over and over and over again with respect to that. That it's a really solid time frame to operate, unless you just have uber capital and you can just have positions on for a lot of time. Most traders don't. So if the idea of having $1,000 drawdown on a day is going to make you squirm, then this is where you need to live. Like, this is where you need to live. Oh man, that's beautiful. Now, what I'm interested to see, one other thing I'm interested to see is, so I mentioned that I was looking originally for this move here at 37. Was looking for potential sellers. There was no trigger to be short, so no short there. And then we got up to my pre-IB bias, which is near value area high. So basically, I have a level every day that's kind of my bull bear bias zone before the first hour of trade is complete. Once the first hour of trade is complete, that changes things. Which we talk about that in another week. But notice that right when we got to value area high, I know that there were participants. So all these guys here on the open that were trying to get short, they were already screaming. And then we got to the value area high, and then there were guys that were like, oh yeah, now we're gonna roll over. And notice where like they got just a little bit suckered in here, and then boom. So that was the second squeeze. Like, oh, so mean, so mean. But that's the game. All right, I don't need to look at this anymore. Yeah, so now now my plan is I look at tomorrow, and we'll see where we trade in Globex. I mean, we obviously had an IB high extension, so that's a measurement of other time frame buyers present in the auction. We had pretty cumulative order flow was definitely to the buy side. That I don't think that's changed. It's still, although it's come down about half. I mean, we're at about we're 4601. We were up at 7700 delta on the Nasdaq. So the order book is definitely softened. We'll see where we are in Globex, after that trade. But what I'm already interested in tomorrow is I've got a level here, today's point of control. I'm very interested. Say we open in this area. Do we come up, test this level, find sellers, and then make a move for 85? I think that could be a really awesome opportunity. Conversely, if we've got an untested level here at 7706, if we're trading above, or if we extend initial bounce, or if we hold this zone and can get acceptance above 76.68, then I'd be looking for a push up here for the end of the week. We shall see. We shall see. All right, I'm watching my clock here. We got about 10 more minutes. What else can I help with? Hopefully this has been helpful. I mean, our whole MO around this is just, you know, no BS, no well, I'm only going to show you my secret sauce, you know, like it's just, I mean, trading's hard enough. It's great to have a community, and, you know, we would love for you to be part of that. And this is a great way to give you an experience around that. Man, they're doing the work. Well, while we're waiting here, I'm just going to adjust some decision levels. I do a little bit of prep for tomorrow. So the question is, if we finish toward the bottom, you know, say for example, we put in another neutral day, and, you know, we trade back through the open. Where is the open on the ES, by the way? So we're close, right? So, you know, if we traded back through the open, close below 14, maybe we can take out these singles. We have a single day. The question is, will the overnight traders keep pushing it down? I have no idea. Nobody does. I will say that certainly. So if you run the math, okay, there's no correlation. There's no statistical correlation between how one day finishes and another day goes. Zero. There's no distinguishable edge. And I kind of look at stats about that on a rolling 5,000 session or 1,000 session 5-year period. However, let's wait and see what Globex does. Okay, so if they press and they make new ranges to the downside in Globex, that would ever so slightly increase the probability that we would see lower prices tomorrow. It's not much. It's not the kind of odds that you'd really like. I mean, it would be barely better than 50%. But it's still distinguishable. I certainly like. You know, why we'll talk, if you're around us much for a long period of time, we talk a lot about focusing on the first hour of trade and what happens after that first hour of trade, because there is actually distinguishable edge past the first hour statistically. That is pretty interesting. Okay, here's a question. Price on the ES did pull back to the 1-minute opening range at 29.18. Was it a buy in your book? Not in my playbook, no, because it's. I don't typically look for trades this late in the session. I'm typically looking to close trades, not open additional trades. But it could be a valid trade. You know, this could be helpful. Okay, so looking at the open is a really great reference to look at. Because if strong sellers, and there are other references like this, so like yesterday's point of control or a multi-session point of control, there are references that a day time frame trader or smaller money cares about, and there's references that the large trader does not care. So if a fund, if an institutional desk is going to come in and sell, they don't give a rip where the open is, because their size is going to be so great, they'll sweep the book and they'll just cut through the open anyway. So they're just kind of placing orders in areas and zones. They don't really care about a specific open. The smaller trader does. So the fact that we've come back and tested the open, kind of holding at, that could say, and if it happened earlier in the session, like if it's not here in the last hour, last half an hour, if we were post lunch and that was happening and we held that, I probably would take that trade, and I would look for especially if we had IB high extensions. That's telling me there are some buyers there, and if I got a good trigger and I could set a defined risk, I'd probably look for rotation back up to the point of control. I can't tell you. I can't say. I would probably, that would be the trade that I would look for. That would be my first target, and then I would look for rotations up to value area high or IB high as the second target, and then and I would trigger on a small time frame. But I would have an absolute risk, because here's the other thing: is if they slice through and the open does not hold, then where do we stop? It's anybody's guess, because if the open doesn't hold, then somebody else is in control of the auction who doesn't care about the open, which means you're going to have to widen your time frame and look at much larger levels to figure out where that thing's going to stop. So that's why you want to have really, really tight risk there. I mean, you always want to have tight risk, but. So to answer, yes, it's a great place to look for a potential responsive trade, not or actually an initiating trade, given that we had IB high extension and that we had positive order flow on the day. Not great this late in the session, because think about think psychologically what has happened today. Think about the psychology of the market. Market opened, pushed higher, got above yesterday's value, and is now retraced all the way back through that. What kind of confidence does that give you in an auction? Like take it out of the context of financial markets. Take it to, we always use housing markets because it's another. Housing markets are a good comparison because they're a continuous auction, just like financial markets. But like if I saw a housing market, go to new highs in a period of time and then come right back to those prices, that's telling me there's not confidence in that auction to go higher. So I'm gonna wait if I want to find, because I believe I'm gonna get a deal, because I'm gonna think this auction is gonna go lower first before it finds a buyer. The question is, since price retraced a lot, can we say that the other time frame trader are absent and we are seeing mostly day trading time frame traders? We could say that. It's hard. It's one of the reasons that we look at extension of the initial balance is it's hard to discern the other time frame trader inside of the initial balance, because they are there. You just can't see them except when you get above value or you get past that first hour's range. Then they start to show up. So there could be other time frame sellers putting in sell orders now that kind of as markets coming to close, that and on this chart I can't really see if we're getting large delta to that that side. But if we took out the low of the IB, then I would say absolutely OTF sellers were present, and the hands of control had shifted. But at the moment, you can see we're kind of fluctuating around the open and just kind of holding the open. So I don't see anything that tells me big bad sellers are here. It could change, but for my plan and my purpose, I'm not interested in participating here. I'd much rather wait till tomorrow. But that's, and that I'll land the plane there. One of the things that is your role as a trader is to have your playbook of setups and conditions that you are really interested in and that you have demonstrated expectancy around, so that you know when to wait for those. And it's like seeing a pile of money over in the corner, and then you can go pick up that pile of money, and then you really kind of are inactive outside of that. It's constant feedback that I get is, man, I didn't realize how little you trade. and it's some of that is born on years when I felt like I had to have a trade on all the time, and then I spent my whole day like on my heels and hating life and not enjoying it, and then found once I had a developed playbook of distinct setups, and I could wait for those setups, I could be in larger size, only be in a trade for a certain amount of time, experience much less pain or heat against me, and consistently grow my accounts. Why would I do anything else? And so that's your role. So if you don't have that, man, make that your focus. Have at least one. Mike Bellafiore over at S&B's got a great book, One Good Trade. Like, have one. Of course, they're all in the equity side, but have one good setup that that you can name, that you can say, hey, it was this trade. In our community, we talk about an IB go with or an IB extension fade. Like that's like the core of our playbook, and we wear those trades out because they show up consistently, and there's data around them, and I can define risk clearly, and it's just worth waiting for. Oh, it looks like I got another question here. Hang on a second. Oh, fantastic. Okay, this is a great question. So how is your today's narratives at the open versus what has happened? Great question. So let me walk you through the products. And so I start, in terms of narratives, I start with the markets that open first, and I prepare a narrative every day for the bonds, crude, NASDAQ, and beans. Okay. So looking at the bonds, notice that the bonds closed above a multi-time frame area. So that 140.05 was really important in my pre-day plan. And after we opened and we had I came in and looked and saw what we did in Globex, and I was like, oh, well, we've made some significant moves higher. We actually opened with a gap, so we had the potential for a gap. So gap rules on my plan is like, I got to wait till see how the first hour trades. First hour, we actually traded lower back into yesterday's range. My plan was to look for a tag of yesterday's point of control at 140.05 to get long for rotations higher. They never got there. So I didn't trigger in bonds. However, in terms of where I ultimately expected the auction to go, I mean, I was looking for the auction to move higher. Now, if the gap held, I was looking for 140.08, 141.08, which that's still the target. And in fact, tomorrow, that'll be the target as well. So, you can kind of watch that. If you follow our decision levels, I'll be looking for early pullbacks in the auction, some positive order flow, see some buyers come in and go for that 141.08. So that was bonds. Crude. So yesterday was neutral extreme day. So the idea was I had two kind of key levels I was looking at. I was looking right here and I was looking right here. So this is multi-session value. This is yesterday's value. Note the Globex profile shape. Singles in the Globex profile, actually a couple different zones, and we opened above this multi-time frame value. So my narrative was, hey, look, we got Globex back above. This is unexpected because we had a neutral extreme lower day, and that is the one day type that you would expect continuation lower. So that told me something had changed in the auction. And so I was kind of like, just wait until the first hour completes and then see. And so that's what I did. And in that first hour, we cleaned up those single prints. We got to this other key level. We extended the initial balance low, And I did take one trade in crude today, and that was after we had come back up through here. So imagine this wasn't a complete profile. You can see from A to B period and into C period, there was a degree of singles in there. So I was like, okay, once we had extended IB low, if we could come back, clean that up, find some sellers in this zone, that would be interesting. We rejected below that. If you zoom in on this, you would see some negative selling order flow that got us to the bottom of value area low. So that was the one trade there. But in terms of a narrative, the narrative was just to wait and see how the first hour played and see how we played with these two levels, which they were both in play. They were both in play there. And then NASDAQ, did not play. I mean, the narrative was, my expectation was we had 85 as a key level, we had 36 as a key level, and was expecting, based on the Globex shape, we had net long inventory, meaning from the close yesterday to the open of the session, it's all long. So I was expecting them to test this and find sellers and rotate back towards 85. You can clearly see that did not happen. So one of the things for me is when the auction is not behaving as my narrative was, I just step aside and wait, and had to wait until after lunch to find a trade. And then soybeans, total, I don't know if you follow grains or this whole tariff deal, but soybeans have just gotten hammered because of the tariffs. Absolutely hammered. I mean, if you have 40,000 bushels of soybeans from June prices to today, you're down almost $200,000 as a farmer, and that would be a small farmer. Yeah, they're really hurting. But if you look at long-term charts, in fact, let's look at some long-term charts. Let's look at soybeans. So if I look at from the scene of the tariff breakdown where it started until I get to back kind of where we are today, there's a little bit of an area here at 892, and then a lot of volume at 981. If I go back and include all of this stuff, 10, $13 a bushel. I mean, this is going back several years, right? Which commodity markets tend to have a little bit longer history, because farmers remember, as producers, they remember, oh, I remember when is this many dollars a bushel and stuff like that. But from the breakdown of the kind of, actually, let's even do this. So put this on a daily basis. Yeah, so here was from the June breakdown. So if I go from this high to here, see where value is? $10.50 a bushel. So, all of these people that are getting short down here, these people got short, they got ripped, they got trapped. They got short again. In fact, they tried to push to new lows. In fact, that day, the day before, was extremely negative order flow, which told you lots of people got trapped, and then they've ripped them. And now, now we're back above the midterm value area right here at this 848. And then if we can hold that, I think 872 is next. And then ultimately, I think we test the top of this bracket at $9 a bushel by the end of the year. But anyway, that's the macro picture. You're looking at that 848 area. We're holding above that. I was kind of interested, based on how we traded yesterday. I was looking at if we could make new lows, because it was an inside day. That would say we'd probably go test, back towards the 830s. Globex came in and changed it, and almost an engulfing Globex. So that said, hey, and that was back above the key value area. So I was like, we're looking long. Look like if we can accept that, which we did, we can get new highs. We did. So I've got some swing positions in beans that I'm still nursing, but to the long sides, I'm still looking for that 870 area. So as long as we hold, daily above that 848, I'm still long there. So that's it. There you go. Oh, I'm beat. Y'all are awesome. Thanks for your patience and your questions. Man, I hope it was helpful. I did actually get it recorded this time. How about that? So be looking for the recording to come out probably sometime tomorrow. I'll get it dumped and out on the server. And be looking for the invite for next week. Keep those questions coming, and watch your plan. A couple ways that you can engage with us. If you haven't already taken our free course, do that. If you're new, if this stuff feels like rocket science to you, and you like, I have no idea where to start. This whole profiling thing is like Greek and the Matrix. Go grab our video course. It's $36. It's seriously like it's a no-brainer. It's 20 hours. I kind of walk through 4 questions you should have before you put on a trade, how profiling can help you, how to use statistics, how could you use profiling to do stocks or futures or Forex. That just gives you a good base of understanding. And then if you're past that, if you're like, hey, that got me and I want to do more, then get started with our pathway. And what's cool is you can jump in at any time, start, even though we're in module 4 this week, I mean, it's built so that you can jump in and then go, back, basically, so like next week we're in module 5, and you can go through that until we get back again to module 6 and get them all. And you can check that out on our website. Follow us on Twitter or Facebook, or if you have any questions, just send us an email, team@tradewithprofile.com, or give us a call. Love to talk to traders. That's it. Have a fantastic Thursday. We'll send links for all that kind of stuff in the follow-on email from this, along with the recording. So make it easy for you, and we'll see y'all next week.